Welcome to Stock Market Free Strategies. This strategy video is for educational purposes and totally free of cost. Disclaimer: trade as per your risk and consult your financial advisor. Let's start with another intraday strategy based upon option chain data. Mostly people use option chain data for monthly and weekly positional trades. Everyone knows that option chain data changes very frequently, and we don't know whether this option chain data is really correct or it is just created by big players to hit our stop losses in positional trades. Most of optional most of positional strategies give losses in index as well as stock, as small traders take positional trade using this option chain data. Whenever market moved 150 to 200 points in one side, the highest open interest in weekly and monthly strike prices changed drastically. Therefore, here we will explain how to handle this change in option data during the intraday movement in either side and when to take the positions. Let's start answering the questions. First, we will get the data from NSE site provided at every 15 minutes for Nifty and Bank Nifty options, and we will use it for our trading. Now we will show you the details. Here in the table we have added the Nifty options data provided at every 15 minutes by NSE dated 13th October 2021 and chart of Nifty at 5 minutes interval to show you how this data gives us the direction of trade. Now we will explain here how we have made this chart and what we have to check in this chart. While preparing this table, Nifty is approximately 18,000 spot price. This chart contains the sum of open positions of calls and puts options from spot to 500 points away on either side. We know that maximum open interest in options traded or available are within 500 points from spot level, and these are more accurate to take the trade. This table also shows difference in calls and put positions and PCR, which indicates ratio of put divided by calls. We are making this chart with Nifty options data provided by NSE at every 15 minutes from 9:30 am. In another video, we will explain everyone about how to make this table and will also provide the link of video for your information. Now let's start how this data will be useful for buying calls or puts. Here in table, the details of calls and puts indicate that how much buying positions by retail traders in call and put side. Why this data shows retail traders? Because for buying options need lesser money instead of selling options. For selling any option needs more than 1 lakh rupees compared to buying it. Only big traders sell the options and always win. We have to think like big traders. Based upon data we checked, we found that 9:30 at 9:30 less calls are bought by retail traders and more puts are bought by them. We here check the difference in calls and puts position and put in form of table to quick access for taking trade. More the difference means it is good to execute the trade in one-sided position. Here at 9:30 PCR is 3.21, means we will take buying side trade, as more retailers have taken put and less have taken call options. So what action big traders will take to earn profit is that they will move the market up. So that all trade retailers who have bought puts, their stop losses goes to be hit, or can say that their money goes to big players in form of their profit. We have seen that as the day moves, more buying options in put side were created by retailers, and big players were keeping the market movement upward and making good profits. At around 11:45 am, we have seen here red candle, which means big players luring retailers that now market is going to reverse from here in their direction. See the PCR value at this time. It is still 16. which means retailers hold 16 times more puts compared to calls positions. Now, can you tell what is big players' next action? Market will again start moving up and hitting retailers' stop losses. As and when market moves up, big side, big upside, retail players think how much market will move upside. Now it has to fall and buys more put options. But most of the time their stop loss hits. Whenever ratio is more than 2 means market will move in that direction. More the PCR value, more the chance of market will move in that direction. If you are not taking any buying positions in calls, at least avoid buying puts during this time to save your money. Now we will show the table and chart of Bank Nifty today, dated 13th October 2021. You see here throughout the day Bank Nifty PCR has not come above 2 and always remain near to 1. Means big traders will not get big profit as by moving in one-sided, as retailer on call and put positions are same quantity. Then what will they do? They will sell both calls and puts and erode the premium by time decay, and retailers lose money in Bank Nifty by buying both calls and puts. On the other hand, retailers keep buying puts in Nifty by watching Bank Nifty movement by thinking Nifty will fall, as Bank Nifty is not supporting Bank Nifty to rise for loss money in Nifty. Now we will see what was happened on 12th October 2021. In this Nifty data PCR value never moved beyond 2 and market was always range bound. This means big players who are always seller eroding premium on both calls and puts. What we have to do during this time means no one-sided trade till the PCR is more than 2 in either side. Now what about Bank Nifty options data shows? There is no one-sided trading till 2:30 p.m. means hedging day for big players. And after 2:30, whenever retailers have taken more put options, considering market will fall end of the day, big players move Bank Nifty up and hit their stop losses. You have to check these data before going to take one-sided options. This data is available free, and with the help of Excel, you may use it for yourself. If you like our channel, hit the like button and subscribe to our channel for more such videos. Share with others so that they also learn and earn with this strategy.